All right, let's do a reality check. Regional wars going on in the world could absolutely escalate to World War III. We have legitimate recession fears and an inverted yield curve that we have yet to be reconciled to. You got to remember, 100% of the time when we got an inverted yield curve, the way that we did in 2022 and 2023, it absolutely led to a massive recession. When, though? That's the big question. Then we've got interest rate volatility that has not been reconciled. Even though inflation has been cooling off, the Fed is absolutely concerned that it is yet to be tamed. As a result, he says that we might get 3 cuts in 2024, but the market, we know for a fact, has priced in 6 cuts. That hasn't been reconciled. Then we've got historically high stock valuations. We're not sitting at the lows. We're sitting at price exploration for a number of big tech stocks at all-time highs. Now, none of this scared Nancy Pelosi, who in December made a $5 million call option bet on NVIDIA. And after that, NVIDIA's price absolutely exploded. It's like she knew something. Who would have guessed? Nancy's worth around $290 million. She's accomplished all of that just making $200,000 a year. This woman knows how to pick stocks, and she wasn't afraid of NVIDIA's elevated stock price. But I'm going to break down for you guys today whether or not we should begin to take profits, buy more. We're going to look at the fundamentals, and we're going to be looking at the charts on NVIDIA. This is the Stocks with Josh show. Appreciate all of you guys for already hitting the like. Throw a heart in the comment section. Say hello. We've been in a series breaking down all of big tech and asking ourselves where would be the best price to buy in 2024. If you want to get the next video in that series, you've got to hit the subscribe button. All right, let's just break down some of the facts. We know that the stock market's hit record highs. We know that NVIDIA is hitting all-time highs. It's currently in what's called price exploration. It really is just shooting straight up in the charts. And the big question is, when does it stop? How high does it go? 100 analysts have currently raised their price targets from $600 to $700. And so they're saying it's got room to move higher. They're citing double-digit revenue growth ahead as the opportunity. And back when everybody was bearish on the market in 2022, this stock was sitting at $108, but has since climbed in January of 2024 to $603. Yes, that's up 457%, making it one of the biggest large cap performers in the world. NVIDIA has killed its earnings, but we've got another earnings ahead of us February 21st. A lot of people are saying that NVIDIA is currently priced to perfection. And what that means is that there may be little room to go higher. Yet sitting on the sidelines waiting for NVIDIA to pull back has been a loser's game. Should we load up? What would be the best buy the dip price for NVIDIA moving forward? And how high can this stock actually go? I'm going to start off with some news stories. We're going to go through a couple news stories to get a big picture view of the fundamentals. Why Western digital stock, not NVIDIA, is Morgan Stanley's top chip pick. Basically, they say because of the risk to reward, because of how high this thing has already gone, even though they go on to say very clearly that NVIDIA is their preferred name in chips. It's not their number one chip pick. We could begin to see some profit taking in NVIDIA and then some diversification into other chip players that have yet to take off the way NVIDIA has. And so they're calling out some different chip companies, risk to reward. Then right on their heels, we've got another one that says why Marvel just dethroned NVIDIA as Citi's top chip stock pick. Same reason that Morgan Stanley gave. Citi is simply looking for a better risk to reward. These are potentially some early signs that the smart money is beginning to already sell into this rally, potentially sell into this next earnings and diversify into some other chip makers. This next article, options, the striking price. Investors aren't taking risk seriously enough. So this article was very interesting. I really enjoyed it. It actually broke down this idea regarding Boeing and Boeing's stock price. And recently, if you hadn't seen it in the news, there was an Alaskan Airlines flight that was on a Boeing plane where the door just fell right off.
Dozens of Boeing 737 MAX 9s are grounded this morning, not by the weather in the Northeast, but by a terrifying mid-air incident on the West Coast. An entire section of the fuselage came off an Alaska Airlines jet after it left Portland, Oregon. This was on Friday. Amazingly, no one was hurt in this incident. Hundreds of flights, however, have been canceled as a result, and it is raising some pretty obvious concerns about how the heck this could have happened.
Now, he goes on to say that despite this is one of many problems that have recently occurred with Boeing planes, and yet all of us are buying airline tickets, and all the planes that get us around domestically here in the United States, the majority of them are Boeings, and we continue to get back on these planes even though they've had these safety concerns. He basically goes on to compare this to the stock market and big tech stocks, saying investors have little choice but to buy U.S. big tech stocks, even though the risk of correction is more likely than the potential for them soaring higher. So he's telling everybody, just take a minute and think about what's going on. It used to be the old adage, you would buy low and sell high, yet in 2023 and 2024, it looks more like buy high and potentially sell higher, but that eventually is going to come to an end. At the end of the article, he says, what would have to happen in Wall Street for the proverbial door to get ripped off the market to give everybody the wake-up call that this isn't safe? Then he leaves everybody with one more question. He says anyone who can answer that question and positions themselves correctly will never need to fly commercial again. And I would agree. And that article, in reference to NVIDIA's lofty stock price, is yet again another warning. I'm going to break down the bull case and the bear case. We're going to look at both sides of the coin because we don't want to discredit this amazing company. And in the long run, I believe that this stock has a lot of room overall in the next year or 2 years to absolutely move higher. I don't think the $700 price prediction is unrealistic, but we want to buy low and sell high in the big picture. What do the bulls have to say? Well, one of the first things I want all of you guys to be aware of is one of the most exciting products that NVIDIA has right now is their Drive PX. These guys are attempting to make a major change in automated driving. I want you to check out this quick clip by the CEO describing what I would refer to as the future brain of automobiles.
We're going to talk about self-driving cars today. Last year, we introduced the Drive PX self-driving car computer. In the future, when you build cars, it's going to be a lot more like a computer. That you have to approach it from a computing system perspective. Software is going to be a very big part of what you do, and ongoing improvements of the software is going to be very important. All of this computation capability is going to have to be done in real time. Because your car is driving through the streets, a lot of things are happening around the world, and you want to be able to detect it, understand what to do, and have the car keep you out of harm's way and navigate safely. We're going to need supercomputing technology. Several thousand man-years of effort have gone into advancing the state-of-the-art of self-driving cars at NVIDIA this last year. I'm going to tell you the punchline. Ladies and gentlemen, the NVIDIA Drive PX2. This is the world's first in-car AI supercomputer, and it's designed to make it possible for us to realize the vision of self-driving cars.
So the CEO of NVIDIA would argue that while Elon and legacy car makers are fighting over the engine or the battery, the car itself is going to become the commodity. The brain is going to be the future of automobiles. The bulls would like to remind all of the shareholders that all of this began with pew pew. And you say, what are you talking about, Josh? Millennials painstakingly putting hours into their Minecraft game playing is what drove this graphic chip maker to build chips that ultimately led to the revolution that is AI development and is now machine learning, which is going to be all about robots moving forward. We're going to see absolutely more of that in 2025. And NVIDIA, yet again, perhaps has one of the biggest advantages in that space. As a result, the bulls would argue that NVIDIA is the king of big tech and is going to continue to be stacking the bags. But we got to keep in mind, what do the bears have to say? Because that gives us a more balanced view. The bears say, first comes boom, then comes bust. Get out before the fall. CUDA may be the leader now, but this hot space is ripe for competition, and vendors will jump on the first open source tools to hit the market. They'll acknowledge that NVIDIA is winning today, but they'll tell you that the tech titans who are focusing on in-house development will be the ultimate winners, and that's not NVIDIA. There's also intense bear rumors that NVIDIA is struggling with productivity due to the fact that a lot of their top management and leaders have become so filthy rich due to stock options that they just aren't aren't being that productive. This has also created a divide because newcomers and underlings who are working hard and not getting paid as much or just not as rich are becoming jealous, and the team dynamic over at NVIDIA is simply breaking down. And this becomes a big problem for them as all of the analysts are having their eye on these up-and-coming chip makers, the competition that ultimately is nipping at NVIDIA's heels. That's the struggle between the bulls and bears, but now we've got to look at what the charts are going to tell us. You guys know I'm a technical trader, and I'm going to keep those charts super simple for you guys. Fact is, we're in what we call price exploration. We're above all the moving averages. The 5 SMA, the 20, 50, 100, and 200, absolutely the bulls are currently driving the price higher. So where do we turn to figure out what might happen next? Well, we want to look at the momentum. We're moving higher, but at what speed? When we go over to the relative strength index, we see that actually the peak of momentum to the upside ended in June of 2023. Even though the stock price has gone higher, it's been going higher on lower momentum, which is what's called bearish divergence. Now, even though that doesn't sound good, the fact is the price can continue to go higher on bearish divergence for a long time. And so we're going to then take another tool to guess at where the price might actually find a brick wall. And that tool is going to be the trend-based fib extension. And we're going to be looking at the golden pocket, right? And that's actually where the stock price has come up to and entered into the golden pocket in recent days. But the golden pocket has a top and a bottom. We're right above the bottom. The top of that's going to be 636, and we're sitting above 590. So we can absolutely continue to play within this zone, moving all the way to the top of the zone up to 636, even perhaps up to earnings. But ultimately, at some point, this thing is going to cool off and it's going to pull back. Now, it could stay within the golden pocket zone of 590, but if it breaks and closes beneath that price, then we want to look at where is support beneath that. I see support at 540, which happens to also be on the monthly chart, the 5 SMA. If we were to lose that level, then beneath that, I see support at a critical level of $485. Now, here's the important thing I want you to consider. If we were to break down from its current price all the way to $485, it would be about an 18% move to the downside. And that to many might sound very unrealistic, but I track all of big tech throughout the year, and to be honest, they typically, on a swing low, pull back between 15 and 30%. And NVIDIA has pulled back that much in the past. And so that wouldn't at all be uncharacteristic. Once we go to test the lows on NVIDIA, 18% would be very realistic. But here's what I want you guys to understand. I'm not calling for that between now and earnings or shortly after earnings. Things like that take time, and so you want to be a patient investor. You don't want to buy the golden pocket at the top of the trend-based fib extension. You want to buy the pullback. I like the stock for a pullback to 540. I love the stock for a pullback to 485. I'm going to drop these charts into the Discord today so you can see them with your own eyes. If you don't know what the Discord is, that's the Stock Squad Patreon. It's myself, Stock Up with Larry Jones, Keenan Grace, and Stockmo, who work together to provide you guys plays and technicals every day. Check it out for yourself. I'm going to leave a link in the top pinned comment. I thank you guys for the like. Hit the subscribe to get the next video in this series. And the next series I'm going to do after that is going to be into crypto and the miners. If you don't want to miss it, you got to hit that subscribe. Thanks for joining me today. Peace and blessings. Take care.